This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news the market pressure on US benchmark interest rates is easing now. First, an updated Dallas Fed survey showed the tech and manufacturing sector contracted less in November, the least in 2.5 years. This was driven by the outlook mood, which improved sharply post-election. But this may just be a partisan hope. New order levels actually fell to their worst shrinkage in a year and continuing a 2-year trend of shrinkage in this oil patch region. And the broader Chicago Fed National Activity Index decreased in October from September to its lowest in 9 months, in a surprise result that was much worse than market forecasts. This index suggested US economic growth decreased. Current forecasts are that the US economy is growing at just under 2%, although the Atlanta Fed's GDP Now model has it at 2.6%. Anywhere else, that sort of expansion would be considered very good for a developed country. There was another large US Treasury bond auction this morning, again very well supported. The yield was 4.24% at this event and higher than the 4.07% median yield at the prior equivalent event a month ago, but not the sort of rise we have seen recently in other maturities. Singapore's inflation rate eased to 1.4% year-on-year in October from 2% in the previous month and below market expectations of 1.8%. This marked the lowest inflation rate since March 2021 as prices moderated for housing and utilities there. And Taiwanese retail stopped expanding in October after a long run of expansion that started in August 2021. But Taiwanese industrial production is still growing at a healthy rate, although that rate of growth is slowing. It was up 8.5% in October from a year ago and down from an 11% rise in the year to September. A year ago in October 2023, it was falling 2.3%, so they've come a long way since then. In China, their central bank injected 900 billion yuan into their financial institutions via a 1-year medium-term lending facility yesterday at an unchanged rate of 2%. That compared with the 1.45 trillion yuan of MLF loans due this month, marking a net cash withdrawal of 550 billion yuan. After the March to August rises, the German IFO sentiment survey returned to its lows for other than the GFC or the pandemic. Analysts see a fading of strength in an economy that was recently an engine of Europe. And overnight, ThyssenKrupp, the largest steelmaker in Germany, said it would cut its workforce by up to 11,000 employees from the current 98,000 by 2030. The US Treasury 10-year yield is now just on 4.29% and down 12 basis points from this time yesterday. And the price of gold will start today at $2,631 an ounce. That's down $85 from yesterday. And oil prices are down $2 at $69 a barrel in the US, while the international Brent price is just over $73 a barrel. And the Kiwi dollar starts today at 58.4 US cents, and up a minor 10 basis points from yesterday. Against the Aussie, we're 20 basis points higher at 89.9 Australian cents. Against the euro, they were down 20 basis points at 55.8 euro cents. That all means our trade-weighted index starts today at just on 68.2 and down 10 basis points from yesterday. And the Bitcoin price starts today at $95,648 and down 1.1% from yesterday. Volatility over the past 24 hours has been modest, at just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.